Good day everyone, this is Ma'am Adoko, and for this subject, Fundamentals of Accountancy, Business and Management, and for our lesson today about the major classifications of the Statement of Financial Position. And before I will proceed to our tutorial, I want to thank everybody for subscribing and watching our tutorial on our YouTube channel, Bright Minds. I appreciate your effort, guys, in following our videos. Okay, so I will give our learning objective. Identify the major classifications of the Statement of Financial Position. Let us try to answer this following question. The correct order to present current assets is A. Cash, accounts receivable, prepaid items, inventories. B. Cash, accounts receivable, inventories, prepaid items. C. Cash, inventories, accounts receivable, prepaid items. The cash, inventories, prepaid items, and accounts receivable. So which is the correct arrangement in presenting the current assets? Is it A, B, C, and D? The correct answer is letter B. Cash, accounts receivable, inventories, and prepaid items. So what is the reason behind this order of presenting the current assets? Okay, so it is because of the order of liquidity. If you remember, I have discussed it in my first video. Liquidity refers to availability of cash or cash equivalents to meet short-term operating needs, like for example, paying expenses and debts as they become due. Okay, so we can see in these current assets, the first one is the cash, because cash is the most liquid of all assets. Before I will proceed to our main topic, let's have a review first. What are the elements of the Statement of Financial Position? The elements of the Statement of Financial Position are the assets, liabilities, and the owner's equity. What is an asset? Assets are the resources that are within the control of the company and have future benefits. Example of an asset is cash. What is a liability? Differentiate liability from equity. Liability are the obligations that the company required to pay to the creditors, while equity is the residual interest in the assets of the owners after deducting all the liabilities. It is what is left in the asset of the entity after the deductions of the obligations or the debts from the creditors. We proceed to our main topic for today, which is the classifications in the Statement of Financial Position. Recall, class, that assets are resources with future benefits that are within the control of the company. And assets are classified into two: current assets and non-current assets, which we can also call long-term assets. Current assets are the cash and other assets a company expects to convert into cash, sell, or consume either in 1 year, while the non-current assets are the company's long-term investments for which the full value will not be realized within the accounting year, since this type of assets are not easily converted into cash. Since we know that current assets are the cash and other assets a company expect to convert into cash within 1 year, so these are the type of current assets: the cash and the cash equivalents, short-term investments, receivables, inventories, and the prepayments or prepaid expenses. I'm going to discuss each one of these as we go on to our tutorial. Cash and cash equivalent is the first account title to be reported in the statement of financial position according to the order of liquidity. Because as I have discussed a while ago, cash is the most liquid of all assets, and cash is under the current assets. So we know that current assets like cash, the company expects to consume the cash in 1 year. And we have different account title under the cash and cash equivalents. And the first one is cash. So cash is generally any monies available on demand. So it is the money owned by the company to be spent for the company's operations, like example, selling operations or production. And then another type of cash is the cash on hand. So it is the cash kept in the company's premises. Example, petty cash to be used for change. And then another one is the cash in the bank. Refers to money in the bank which can be kept in savings or checking account. And then another one is the bank checks or checks. So these are bank documents used by the issuer to instruct the bank to pay the assigned payee funds in the issuer's bank account. So checks may be reported as part of cash. Why? Because these documents are accepted as payments and deposits. And also, take note, checks will be only classified as cash if the date of the check is on or before the SFP date. So remember this, checks will be classified as cash if the date of the check is on or before, like example, January 30. So it will be classified as cash if the date on the check is January 30 or before January 30, like January 28. And then also a check dated after the SFP is a post-dated check. So if the date will be January 31, so it will not be classified as check. So it will be classified as receivable rather than cash. And then the last type of cash is the cash equivalents. Cash equivalents are technically not cash since it is not immediately available for use. Example of cash equivalents are the time deposits in the bank. So time deposits with term maturities of 90 days or less are considered as equivalent. So 90 days will be equal to 3 months or less than 3 months. So it is considered as cash equivalents, while those that mature longer than 90 days or more than 3 months are reported as investments. So if the time deposit is more than 3 months or 90 days, it is not considered as cash equivalents but investments. So cash equivalents are reported on the SEP together with cash, and the line account is cash and cash equivalents. Let's try this problem. Friendly convenience store, cash and cash equivalents. Friendly convenience store is managed by Juana de la Cruz. Juana asks you to determine the balance of her cash account as of December 31, 20, X1. You determine the following. Number 1, she keeps some cash in the store as change fund or sukli. The cash count revealed 3 pieces of 100 peso bills, 5 pieces of 50 peso bills, 5 pieces of 20 peso bills, 5 pieces of 10 peso coins, 10 pieces of 5 peso coins, 10 pieces of 1 peso coins, and 25 pieces of 25 centavo coins. And then the second scenario, 2 of her regular customers give Juana the following checks in payments of debts. A, 1,540 pesos, check dated December 31, 20, X1. And in the second, 2,432 pesos, check dated January 3, 20, X2. And in the third scenario, there are 2 bank accounts in the name of the store with the following balances. A, balance of the savings account on December 31, 20, X1 according to the passbook is 26,780 pesos. And then the second, a time deposit certificate for 100,000 pesos for 90 days. Okay, so report to Juana de la Cruz the balance of the cash and cash equivalents account of Friendly Convenience Store. We proceed to answer the problem. How much will be the balance of the cash and cash equivalent accounts of Friendly Convenience Store? Okay, so the cash on hand amounted to 766 pesos and 25 centavos plus the checks worth 1,540 pesos. So the total cash on hand is 2,306 and 25 pesos. So take note, only the check dated December 31, 20 X1 is considered as cash because the date is on December 31. So the check dated January 3, 20 X2 is a post-dated check. So this is not considered as a cash of December 31, 20 X1. So our total cash on hand is 2,306 pesos and 25 centavos. And then Friendly Convenience Store has a cash in banks amounted to 26,780 pesos on account on December 31, 20 X1. And then we total the cash on hand and the cash in bank. Okay, so it amount to 29,086 pesos and 25 centavos. So this is the total cash of Friendly Convenience Store. And then we have a time deposit certificate for 100,000 pesos for 90 days. So this time deposit is within the term of maturities of 90 days. So this is not considered as cash, but considered as cash equivalents. Okay, so we add the cash equivalents to the cash. So the total cash and cash equivalents amounted to 129,086 pesos and 25 centavos. Another account under the current assets is the short-term investments. So short-term investments is also called a temporary investment or marketable security. So it can be debt or equity security that is expected to be sold or converted into cash in the next 3 to 12 months. Another account under the current assets is receivables. So receivables refers to the company's right to collect or claim payment. The right to collect comes from unpaid sales or lending activities from the customers. And examples of receivables is the cash on delivery or the COD. It is a sale agreement that requires a customer to pay the seller immediately upon delivery of goods. So another one is the account receivable. So it is in contrast to COD. A customer may instead promise to pay the seller at some future time after the delivery of goods. Account receivable normally has a term of 30 days, which means the customer should pay 30 days from the date of delivery. It can be also 60 days, 90 days, or 180 days. And then note receivable. So another kind of receivable. So it is evidenced by the promissory notes or PN. Promissory notes is a legal document that says the borrower promised to pay on scheduled payment dates. So these are the accounts titled under the receivable accounts. Let's try to answer this. Friendly Convenience Store accounts receivable. I want to ask you to compute how much Maria Reyes owed the store. Juana sells to Maria on credit. Maria pays every 15th and 30th of the month. Maria's listings are reproduced below. So you can see below what are the bills of Maria, starting from the month of September 5 to December 30. Okay, so this is the amount of account receivable. Okay, so it amounted to 154 pesos. And from the month of September 5 to December 30, we can see that Maria pays her credit 5 times. Okay, on October 15, she paid 200 pesos. On October 30, she had a payment of 100 pesos. And then on November 30, she had a payment of 100 pesos. And on December 15th, she had a payment of 100 pesos. And on December 30, she paid 100 pesos to Friendly Convenience Store. So the account receivable for the Friendly Convenience Store is amounted to 154 pesos. Another asset account under current assets are the inventories. Inventories refers to the goods and materials that a business holds for sale to customers in the near future. So inventories are composed of raw materials, work in process, and the unsold finished goods. And also take note and remember, only merchandise held for sale are reported as inventory. And the items that are used in the day-to-day activities of the company are called supplies and not inventory. So remember, items that are used in the day-to-day activities of the company are called supplies. And then inventories are the merchandise that are held for sale, are reported as inventory. Another term that we need to learn is the word consignment. So consignment is when the owner places his goods on consignment in the premise of the store owner. So I know you are familiar with the word consignment. The store is not obligated to purchase the goods. The owner can withdraw the unsold goods from the store at any time. So if the owner decides to withdraw, so the store is obligated to give in. Then the store owner's income from these transactions may be in the form of commission from the sale or rent from the store space used to display the consigned goods. The store should not report the consigned goods as inventory. Let's try to answer this also. Friendly Convenience Store inventories. Before Juana opened the store on January 1, 20x2, she asked you to help her count the merchandise inside the store. The result of the count are given below. Okay, so the merchandise, she has 2 bags of candy worth 30 pesos per bag, 10 sachets of coffee, 6 pesos per sachet, 10 sachets of laundry powder, 15 pesos per sachet, 1 sack of rice, equivalent to 50 kilos. Cost of the sack of rice is 1,800 pesos per sack. Then 10 cans of sardines, 15 pesos per can. 10 chocolate bars, 20 pesos per bar. Then she has 5 notebooks, 25 pesos per notebook. And there is a note here. The first is the chocolate bars were on consignment from Chocolate A. Then the second scenario is, of the 5 notebooks inside the store, 1 is used for listing of customer credit. Then report to Juana de la Cruz the balance of the merchandise inventory account of Friendly Convenience Store. Okay, so this is our answer. Okay, so the 2 bags of candy, which cost 30 pesos per bag, okay, 60 pesos. And then the 10 sachets of coffee, which cost of 6 pesos per sachet. Okay, so the total is 60 pesos. And then the 10 sachets of laundry powder, which cost of 15 pesos per sachet. The total is 150 pesos. And then the sack of rice cost 1,800 pesos. And then the 10 cans of sardines cost 150 pesos. And then the 4 notebooks, okay, because the 1 notebook was used by the store as a customer's list, so only 4 notebooks left. Okay, then the cost of that notebook is 25 pesos per notebook, so the total cost is 100 pesos. And then the total merchandise inventory as of December 31 is 2,320 pesos. And then it was stated in the problem that there are chocolate bars, okay, 10 chocolate bars that were on consignment from Chocolate A. So since the chocolate bars is on consignment, so the store does not consider it as an inventory. And then the only 4 notebooks are accounted because they are on sale. So the 1 notebook were used for the office. So the total merchandise inventory as of December 31, 20X1 amounted to 2,320 pesos. Another asset account that is classified under the current assets is the prepayment or the prepaid expense. Prepaid expenses refers to future expenses that the company had paid for in advance. It is placed in this account until the services or items are used and become expense. Payments of cash is recorded as an asset because service or benefits will be received in the future. Like example, you pay the rent in advance for 5 months. Okay, so those 5 months prepayment is considered as an asset and under the current asset. And then when the 5 months are done or finished, so automatically it will not be a prepaid expense. It will become an expense account. We have an example, Friendly Convenience Store prepayments. Juana paid premium of 2,500 for 1 year fire insurance in the name of the store on October 1st, 20X1. How much should prepaid insurance be on December 31st, 20X1? Okay, so Juana paid insurance for 1 year in the amount of 2,500 on October 1st, 20X1. So the insurance will cover the month of October 1st, 20x1 until September 1st, 20x2. And then the problem is asking how much should the prepaid insurance be on December 31st, 20x1. So from October 1st to December 31st, it means already 3 months had been used up in the insurance. So it means that 3 months already become an expense in the side of the Juana. And then the remaining months from the month of January 1st, 20x2 to September 20x2 are 9 months. Okay, so we need to divide the 2,500 by 12 months. Okay, so the insurance fee is 208 pesos and 33 cents per month. And since the 3 months from the month of October to December 31, 20x1 had been already used, okay, so there are 9 months remaining. So we multiply the 9 months to the amount per month. Okay, so 208 pesos and 33 centavos per month multiplied by 9 months remaining. Okay, so the prepaid insurance amounted to 1,875 pesos. Thank you for watching this tutorial video. The non-current assets topic will be discussed on the second part of our tutorial video. Thank you guys for watching, and don't forget to subscribe to our YouTube channel. Good day and God bless.